Hey, what's up, guys? Testing, testing. All right, so what's up, everybody? This is Chef, and today I'm going to keep this very, very simple. And it looks like a lot of people are having trouble with, trading their positions. One of the biggest things when it comes to trading is being able to capture, a full move or uh, a decent move in a specific trade, whether it's calls, whether it's puts, right? The whole purpose in being able to trail a position is to understand the value of that direction. Again, whether it's up or down, it doesn't matter. We want to be able to understand where we should take profit, where we should scale out, why we are trailing, et cetera, et cetera. Everyone has a different size account, 100%. Okay. Now, some people have small accounts, other people have large accounts. They all range from like $200 to, a million. So it's all of a lot of different sizes that you can trail positions based on how much you're in, right? So for example, um, hopefully you guys do understand that everybody's account is way different, and you have to treat your account very, very different from every trailing position that is out there. Um, let's see. So I'm gonna choose Microsoft just because Microsoft had a very decent day, and it was actually on my watch list as well, right? So it all depends on the time frame you're in, guys. Okay. Technically, I can't really tell you guys there was a setup on here because we're already 4 hours into the market, with just a few minutes above. But I'm gonna go on the 15-minute here. Okay, so I enter all my trades on the 15-minute, and I get all my levels from the 4 hour. I also use pre-market levels so I can get the guidance of where we're going. Okay. Now, I don't know how much time you guys have to be able to be on the screen, but if you can't be on the screen for more than an hour, you shouldn't be in a trade more than an hour. If you can't be on your screen more than 30 minutes, then you shouldn't be in a trade more than 30 minutes. Okay. I only say this because some of you guys go to work and then you guys don't set alerts. And then you guys start saying like, oh, well, I was at work, so I couldn't manage my position. Well, if you couldn't manage, you should have been wise enough to get the heck out of that position because you cannot look at the screen and what's going on. Next thing you know, the next thing you're saying is, well, I'm at a loss now because I'm at work. Did I just cut it? Hey, are you still in? Dot, dot, dot. You're trying to find all these reasons and excuses to stay in the trade when you should have never been in that trade while you're at work. Especially if you don't got time on a contract. If you even if you do have time on an option contract, just know that IV is a big part in what we do and how those percentages affect us as option traders. So that position might go red on you 50%. Next thing you know, you cut it and then you go back to work and then you come back and that position is up like 10, 20% again. And then you're kicking yourself again. So whatever it is, please don't be on a position if you cannot monitor it more than the time frame allotted to yourself and to your life in general. Okay. Anything above that, you're on your own, and I cannot hold your hand. Okay. Now check this out. I'm going to show you how I do this on the 15-minute, and make sure you guys pay attention. Okay. So I use pre-market levels. Where's the pre-market level here? So technically, it's right here, right in the bottom. Okay. I'm just going to use these little yellow boxes. The other little top one is basically right here. Okay. So I'm using the little base from pre-market. And then you have this little high right here that happened. Now, what setup is this? Technically, there is no specific setup that you can say, oh, well, I'm going to enter here. I'm going to stop out there because the setup is this. There is no setup. Okay. All it is just using pre-market levels and the previous day lows. So you can see that from 401 area, we ended up pushing back up above. And now we use the pre-market levels with the good market sentiment right at the open. Microsoft held. So from where we opened right here, from that 407.60, this entry, that first pop would have been your gap and go trade. That setup is a gap and go trade. Okay. So basically from right here where we closed yesterday, we gapped up, we pushed right here and we went. Okay. Now, how do you how do you enter a gap and go? Technically, you get in right at the open because it's a gap and go, and it pushes up. The minute it pushes up, you should be able to sell your position into strength on that first candle, no matter what happens. Okay, that's the gap and go setup. Now, second thing, how do I re-enter this position? Okay, well, technically, you wait for that opening candle. Okay, so I'm gonna take these off right now. So you wait for that candle to close. Okay, so it's kind of hard to point that one out. But look how high it went. It went all the way to like 409. I'm just say 4970. Okay. So what happens here is you want 50% of that to be controlled. So about 50% is like about right there. Okay. Your entry technically should be based off the candle bodies. Okay. So you could have entered right here on this candle body and use that same candle body as a stop loss. Okay. Keep it so simple. Let's say you do enter the minute it pushed back right above, right? That should have gave you a confident entry saying that, okay, it rejected, it came right back up, and it stayed above 408. So 408, you could have trailed all the way, and then that would have been your first target. Once you hit your first target, what you want to do is you want to use 50% of that same entry that you use, okay? So from 408 all the way to that first target, 409, I'm just going to say 409.70. 50% of that, what is it? All you got to do is go right here. That's 50% of that. Technically, you're in the green on that same position. Okay. Now, once you enter that, you're already green. You're allowing this is already 15 minutes. I'm on the 15-minute candle, guys. I don't go anything lower than this. All the other ones are just baby time frames. They're just a bunch of noise. And next thing you know, you want to move your trail stop up, right? So you're going to just grab this little thing here. And you're going to allow the next candle to develop, right? The next 15-minute candle. You move it up now, and you use that same candle body now as your new trail stop, guys. Okay, so look at that candle, right? Where's your next target? Technically, your target is right here. You're just using the previous day. So technically, on this day, there was nothing. Okay, so you can't really target anything. So you just go move on to the next day and look at that target. Okay, once you blow that right above, you're still in the position. Remember, your entry was right here. Okay, so this is what I'm gonna do. I'm gonna keep that green just so you guys know that that was the entry. Okay. Next up, you let that 15-minute candle do its thing. All right, remember, you're still in the green. I don't care how much percentage you are. Okay, it really doesn't matter because what we're doing here is we're learning candles. Again, I don't care for percentage. You let that candle close. Boom, right? So it basically closes from 409.70 to 410. I'm gonna just say 30. Okay. Cool. Let the next candle open. You see how high that thing ran? All right, let's grab this thing. Let's put it up right there. That candle body is now your stop loss. Okay. If your trail stop, that means if this trade, that next candle goes below this little yellow box right there, you get the heck out and you don't think twice. Okay. No matter what happens in the world, you get the heck out. Your position is in the green. Technically, you enter from 408 basically to 410. That's a $2 move on a option contract. That's a great percentage. Just letting you guys know, throwing it out there. Keep your mindset. Okay. Next thing, you let that next 15-minute candle close. All right. Once that 15-minute candle closes, guess what? What do you do again? You grab 50% of that candle. Boom. There's your 50% candle, and that now becomes your trail stop. Okay. Does that make sense, guys? I hope this makes sense because technically what you're doing is you're allowing a trade to go in your favor. And you entered at 408 and you're riding all the way now at 412 and you're just being patient. This is 15:30, 45 minutes of being in a trade, all green and not getting stopped out whatsoever. Okay. All you got to do is come on here, extend that, and let this play out. If you want to take profit up here, fine. Do your thing. You're already like super green and there's no reason for you to get out that position still. Now, had I seen this, nice little base out right here, I would have got out already right there around 412.50 or just waited till 412. It didn't really matter. I would have been out of my trade right here on this candle. And then just let it do whatever it wants. Technically, you don't have to capture every single candle. You don't have to capture the whole move. The purpose of you trailing a position is to stay in the green, and whatever happens right after, who the heck cares? You're a trader trying to protect your capital. You're a trader trying to grow an account. You're a trader trying to create discipline and consistency. The more you do this, the more you trail a position, the more green you will be in all your trades, no matter what you do. Because let's just say you did enter at 408 right here, right? 'Cause some of you are gonna ask, well, what if I do enter and where do I stop out? Technically, I told you guys that is your stop loss. Look how tight that is, all right? If you want to be a little more loose, use this pre-market right here and let that be your stop loss. So technically from 408 to 407, that is a $1 stop loss on an option contract on the chart movement, okay? Now I'm gonna go do this again because uh, you guys are probably still asking for more examples, all right? So this is just one example, all right? All right, let's do Apple, okay? All right, I'm actually in Apple still, and I'm actually in IWM since I called IWM. Um, I'm in 204 calls right now, and I'm also in some 205s, but I'll show you guys in a bit. Anyways, you guys all know dojis, right? Look at this beautiful doji. Okay, if you guys didn't see it, I'm sorry. Okay. Anyways, pre-market levels. Okay, you can use the previous days, you can use the previous 2 days, all as guidance. Okay, at this point, Apple, I actually had calls here. I entered around somewhere in this level, and my position closed red. And then as soon as we opened, that happened, and I stopped out technically at like 172. Took a pretty big loss, but it's okay. No big deal. I still get to live to see another day and still be able to take day trades, right? Anyways, when you guys see these aggressive moves, these are falling knives, and you want to wait for something to actually give you some type of confirmation to go to show a reversal, to show a nice bounce. If you were to catch this falling knife, you could have caught it, and just using all these little pre-market levels here, you can see 171 hit perfectly. Now, again, is the same thing, right? A doji. I always tell you guys, I don't know how many videos I've made and talked about dojis. A doji is very, very simple to trade. Your entry is right above the candle body. Your stop loss is right below that candle body. The sentiment is right above, the sentiment is right below. It's very, very simple to understand. That's what doji candles are all about. Wherever you see them, whenever you see them, that's what they do. How aggressive will they move? I don't know. That's why we trail, right? Let's just say you did enter this Apple and you entered, let's just say right here, you still use 50% of this specific candle as a stop loss, guys. So technically, you would have been green for 15 minutes. You could have scalped it, or had you been a little bit more patient right there at 172, you would have rocked it all the way into that 172.60 and to as high as 172.88, and you would have got trail stop in the green. Okay, so same thing. Same thing here. When you see these bullish engulfing candles, okay, that becomes your entry point right there. And now you enter this position, boom. This is now your trail stop right here. Your target is right there. Okay. So however this plays out, you guys tell me by the end of the day, where did this end up going? Did it hit 174 target? Is it going to hit this wick right here? Is it going to hit this candle body here? You guys can see all my alerts are just up there. Or will it hit the opening wick? Okay. Who knows? The whole purpose of this is to understand how to trail based on candle bodies and everything. Okay. So that's how you trail that, right? I'm gonna show you another one because this is another trade that I took, and I'm actually still in its RTY. Well, I should pull up IWM because no, that's all right. Let me just clear this chart real quick. That makes sense, guys. I hope it does. Okay. All right. Here's another one. Okay. This is IWM, which is RTY. Okay. Look at all these bounces. Okay. These are your wicks. Okay. Just want you guys to see where we're at. Look what happened here. Okay, this thing actually dropped aggressively, came right back up and reclaimed that level. When it reclaimed that, technically IWM was at 205. Okay, so the position um, is right here. Boom. So here's your first candle. Second candle developed. It dropped back down, retested right away, and it pushed up all the way into that 2098. Told you guys target, right? From that 2090, 2090, 2095. Okay. And then the other one was 21. Technically, we hit that 21 right there, almost right on the dot. So even on this position itself, you could have still held. This now becomes your stop loss here. Okay. So it dropped a little bit right below, no pressure in the market whatsoever. And then still riding up all the way into that. Then this created a doji. That should have been your signal to get out of that trade right away. So 15, 30, 45, maybe 50 minutes if you allowed it to go green. And then you would have been, I believe it was about 17% into the position, which kind of worked out in its favor. It's kind of very, very nice. Okay. Now we're in this other trade. Okay. So this is where I'm calling IWM again. So technically, why did I call it? Now check this out. So if you guys don't know IWM, this thing likes to pop and drop on wicks. So the stop loss is basically right here, 2072. I actually entered 204 calls, which I'm gonna show you right now. Okay. You see, so I entered 204 calls on this candle right here. Okay. Where's your stop loss? Right here. Oh. So today, that's kind of where my stop loss is at. But I bought some time just based on the time frame 4 hour, and I'm allowing this to actually develop into the next few days. This one right here, RTY, is the one that's pretty much behind in the whole market right now versus YM, ES, and then Q. But I think that's okay. I think it still has room to go back into the upside. And I'm kind of looking for something to do this. Kind of like that. Okay. So I guess we'll see if that does happen. If not, then it's probably just gonna do this. Okay. But that's the chances that I'm taking. That's the position I'm taking just because it's a nice bullish market and it's still a little bit behind. So just got to be patient. Just got to understand why we're in it and where we should get out. So I can't control what happens overnight. The market gaps down. This has potential to keep on dropping, which is the risk that I'm taking. But again, I am 100% confident in holding my trade. Okay. And I'm going to show you guys another one that's actually happening right now. Google. Google actually has a nice, decent setup right now. I was actually waiting for it, but it's all right. No big deal. It's happening right now as we speak. So again, a lot of names, midday, sometimes a lot of patterns happen, and you could have traded easily this pattern right here. Okay. Hopefully you guys see it. What's happening here? It just got a little tight right here. Okay. We pushed up right from the open. Again, it was a drop and then it popped real fast, cooled off right here into the midday. And then these candles right here, you could have taken it here at 50%, and then your stop loss right there. So nice little scalp and a little pop. Technically, this becomes your target because that's where a lot of retail traders will try to buy the top, and they're the ones that are going to get stopped out. They're the ones that you are going to sell the contract on. Why? Because you understand the breakout of this pattern, and then your stop loss right here because of trailing now. Okay, very, very simple to understand. Okay, hopefully you guys do see it, right? Now we're going to talk about BA downside. Okay. This one had broke some major levels on the 4 hour time frame, basically from Friday 200, gap down, drop, gap and go. So again, using pre-market levels, this was a gap and go. So basically from the open, it just dropped all the way. First 15-minute candle, you use that again, 50%. Okay. Look at that, right where we rejected, right there, 50%. You can use your little fib tools if you want. I really don't care. I just grab the candle and eyeball it at 50% of that candle. That's all I do. Nothing special here. No specific tools needed to keep it plain and simple, right? Based on who controls the direction, that's what I do. Again, no extra tools, no extra stress, just candles and direction and understanding who's in control and who's not in control, right? Anyways, you could have never stopped out of this position. Technically, you could have held on. Had you only taken it for a scalp, you would have used this next candle right here. You'd use this candle right here as a trail stop and then allow that to keep on dropping if you wanted to. But again, you would have got trail stops or 50% and you would still be in the green. So no matter what you do here, you would have been green on puts, okay? Man, I hope this helps you guys because again, a lot of people do not know how to trail position. I'm gonna do Tesla now. Okay, so same thing. This this actually rejected very hard up here, and it was a gap and go setup as well. Uh, Look at that. The difference here now is that you use 50% if you wanted to get in and scalp some calls. You use 50% of that candle. And look where we land on that candle, okay? So 1, 2, 3, 4. Technically, that dip would have been a little bit more aggressive had you caught that. If you caught that, you would have considered a double bottom, which most traders probably did, and that's why it probably had that aggressive bounce. I personally don't like anything about it just yet. I am in leaps. I still do believe in the value of Tesla long term. So I will be holding, about 10K position in this. Leap cost of 2025. I don't think it'll go lower. If it does, it's all good. I'll just buy a little bit more and make my full position about 25K into 2025. Just because I believe in Tesla long term and the company in itself. It's had a great value buy right now for investors out there. So I'm taking advantage as well, right? That I have the capital and I have the time. So it should work out in my favor. But anyways, you use 50% of that. And then right below 50% is stop loss, and right above you just target that. You just target basically the opening candle. And then that's how we look for trades, right? But yeah, that's kind of what we trail, how we trail. It's basically the time frame that you enter on. You make sure that you follow each candle and you use the bottom candles. You use 50%. You use the top candle again. It's the candle bodies, not the wicks, guys. Okay, candle bodies versus wicks. Why? Because candle bodies are the opening and closing of buyers or sellers. The wicks are areas where people are aggressively buying or aggressively selling. Could be forms of fake outs, could be, a bunch of orders placed in that get filled, automatic orders, entries that people place. So a lot of stuff that goes to it. But again, I keep it very simple and I trail based on candle bodies alone. Okay. I use wicks if I have to on specific tickers just based on their characteristics, but otherwise I really don't use them all. I think RTY is the only one out there that I use wicks on, just because I've been watching this name specifically for quite some time, and I've made a lot of money on it too. But also I can lose a lot of money as well. So far, the trades on IWM have not failed me. If they do, it's because I made a mistake. So yes, I am red on some of my RTY, but my other position that I'm in, I think I'm going green now. I don't know. I won't check probably till tomorrow. I don't have a reason to, stare at my phone or anything like that. But yeah, remember, if you have a small account, take profit on 2 to 3 candles. Imagine you always taking profit. 1, 2, 3 candles, you're green on the day, you can walk away and not worry, right? Imagine if you had a massive account and you take profit on the first 3 candles and you always do that, you're still green. Imagine if you had a mid-sized account and you were to take profit on the first 3 candles, you are still green. Just letting you guys know, okay? There is a point where you become consistent and you no longer need 20 candles just for you to be green. You no longer need a full day to be green. Sometimes you just need 40 minutes. Sometimes you only need 15 minutes and you're done for the day. So remember, it's about managing your risk, protecting your capital, growing and be disciplined and be consistent 100% of your trades, whether they go red, whether they go green. Respect your stop loss, respect, the trail stops, respect that when you see 20%, you can get the heck out. Okay. And then set a trail stop at 10%. Okay. I don't know what else to tell you guys. I hope that helps. But yeah, you guys stay green. If you guys have any questions on what I just talked about today, please feel free to DM me, tag me in the chats wherever you're at. Some of you guys are on different servers or whatever. Um, that's okay. You can still tag me, send me a DM. Chef Zones, that's who I am. On Instagram, that's what I am. Chef G316 on Discord. Um, I just tagged him. Somebody out there knows me, especially if you're watching this video. You should definitely know where I'm at and how to find me. Okay. But anyways, you guys have a good one. Enjoy your week, and I guess I'll see you at all-time highs again, huh? Cheers, guys.